GameStop moving lower in the pre-market after last week's wild ride for the so-called meme names. Shares of the video game retailer took a nearly 20% hit on Friday after soaring earlier in the week. Jim, and we talked about the split between fundamentals and market pricing.
Right, and then, when I was thinking about what brought a lot of Gen Zers back was this, and a belief that you could beat Wall Street. It was never Wall Street that you were trying to beat. It was you were investing in a company with shaky fundamentals. Now, just show you Take-Two, which you had Strauss Zelnick on. I mean, it's a very hard business because when they get the game right, it's got to be perfect. But you don't buy it there. You download it on your Xbox. And what the fundamentals, what they seem to not understand, the people who are buying that, is it's a company. It's a company that's very challenged. It's a company with very little information. It's a company that is kind of a CEO who doesn't really care for explaining what he does.
Right.
And it doesn't have a big short position anymore. So there were so many other stocks they could have gone after. They should just let it alone, but they seem to not be able to resist, and I feel badly because it's not a way to make money anymore. There's no short to beat up on. There's no short that's flailing and has to cover. It's just now you're investing in a company that is a second-rate company.
Do you think the companies, though, themselves are now nimble enough to say, look, if you're going to present this opportunity, we're going to meet you at the market?
I was very surprised that it took. I mean, why didn't GameStop have that in place? I mean, Adam Aaron sure did, and he completely gaffed everybody because he's such a good CEO, but because he's got to pay off near-term debt.
Right.
But I would have thought that GameStop would have had some program that was ready. You also had to pre-announce apparently at the same time. So you had to say how poorly you're doing and put the you couldn't issue a program apparently
right.
and not tell people how poorly you're doing, but you could have like a quarter ago done it. GameStop, they just didn't do it fast enough, and they don't have a bad balance sheet, so I don't want to portray it that they needed the cash necessarily. But if you're going to continue in the way that they're doing, where you're having a declining business, you need all the cash you can get. They needed to reinvent the company. Now, I was in Mad Money trying to figure out some other what they could be doing, and I keep coming back to they have too many stores. They have must be some stores that are profitable. You have to close the ones that are not. That would have saved a lot of companies. Bed Bath & Beyond could have been saved by closing the non-performers, but they don't. They seem paralyzed, and people are investing in a paralyzed situation where they even didn't time and they're doing it at the market, which I hate because that means you can't move it up. They'll always be there.
Right. We'll keep an eye on it. It certainly has been an interesting week or so, given the meme dynamic. Let's get the opening bell here.
I think it's fair to say that GameStop should consider ways to reinvent the company's business model. At the same time, let's not forget that GameStop has made tremendous progress over the past few years by cutting costs and improving efficiency in the business. And in my view, that's the first step in turning the company around for the better. The past week has refreshed our memories on many of the problems in the financial markets. Substantial amounts of individual investors' orders being routed off exchange, a plethora of halts, including more than 30 halts in 24 hours. All the while regulators say nothing, massive dark pool prints during said halts, market makers being allowed to create infinite liquidity while subsequently being allowed to short the stocks they create liquidity for, financial media smearing individual investors, and people questioning if ordinary people should be allowed to post memes on social media. I think it's important to remember that whatever you think of GameStop or AMC, the stocks of these companies have brought to light many of the problems that plague the financial markets. I'm not saying whether or not you should buy these stocks or not, that is entirely up to you. Either way, the problems that these stocks have brought to the public's attention should be addressed and fixed, regardless of what you think of these companies. In my view, market makers should not be allowed to double as hedge funds. Market makers should not be allowed to inject, quote, infinite liquidity, in the words of Doug Sifu, into the financial markets. All of individual investors' orders should be routed to lit transparent exchanges rather than opaque dark pools. Payment for order flow should be banned. It is already banned in many other countries due to the insane conflicts of interest it creates. Short interest data should be reported as close to real-time as possible. The technology exists for this to be the case. It's just that the willingness to make it happen is absent. Regulators should hold large institutions accountable for their actions. And when an entity fails to deliver on their obligations, they should be held to account. These are some of the changes that should be made in the financial markets. GameStop and AMC have brought many of these problems to the public's attention, and that is why this situation is about far more than just two stocks. It's about the integrity of the financial markets, or rather, the lack thereof. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.